Hello students, I am Narsimlu, commerce teacher. Today I am going to teach you CEC first year accountancy topic ledger posting. In this video I will explain the procedure of ledger posting step by step. Dear students, you need to listen and watch carefully the video and try to understand the points that I will explain in this video, and the steps also you can go to observe how the journal entry will be posted in the ledger book or in the ledger accounts. Now let's start. So here we begin with a journal business transaction. We can go to begin here with a business transaction. See, one business transaction is given here, that is on 21st June 2014 a computer purchased for cash rupees 50,000. So it is the business transaction. Okay, so you know the way, you know the procedure how to write the journal entry for the given business transaction. So, and if you write the entry for the given business transaction, that would be like this. So here it is given in the journal pro forma date. In the date column you will write the date and year 2014 June to 21st, and in the particular column you can go to write the debit account and credit account. So debit entry, that is a computer account debit to cash account. So debit entry is the computer account, credit entry is cash account. So before the computer account, in the debit column we've written 50,000 rupees, and here cash account, that is the credit entry. For that we've written in the credit column rupees 50,000, and the narration is being computer is purchased for cash. So you know the way how to write the journal entry in the journal for given business transaction. Once again I will repeat it to make you better understand the procedure, how we are going to post the journal information into ledger. Okay, see here, we know every business transaction will have two aspects. So in this transaction there are two aspects, one is computer, another is cash. So cash and computer both are assets. Cash and computer both are assets. So these two are assets, so they come under real account. So when they come under real account principle we can go to apply for these aspects. Okay, so what is the real account principle says? Debit what comes in, credit what goes out. So here when we purchase the computer for cash, is the computer coming in or going out? That is the question, and answer is, when we purchase the computer generally comes into the business. So when it comes into the business, that should be debited. So here we debited the computer account and written the amount in the debit column. So computer account debit, it is the debit entry, it is also called as debit entry. And come to cash. See, when we purchase the computer, is cash coming into the business or going out from the business? And the answer is, whenever we pay cash, so generally cash goes from the business. So when the cash goes from the business, immediately we can go to credit it as per a real account principle. So here we've written the entry. Here see date in the date column 2014 January 21st, and computer account debit, it is also called as debit entry, and in the debit column 50,000 to cash, that is the credit entry. In the credit column we've written 50,000 rupees, and narration being computer is purchased for cash. So the first step is completed, means here for the business transaction, what is the business transaction here? The business transaction is 21st June 2014 computer purchase for cash, that is the business transaction. And this info for this business transaction we've written in the entry in the journal book. So primary activity we completed. So primary accounting activity we completed. Okay, now come to next. We have to transfer that journal information into the ledger. So how we are going to transfer the journal information into the ledger? So primary entry we completed. Next, secondary entry. How we are going to record the business transaction in the ledger book. It is also called as secondary entry. So see here, how many accounts are there in the entry? See, in the double entry there are 2 accounts. Okay, see, computer is one account and cash is another account. So here on the names of these accounts we can go to prepare accounts. See, computer account, we can go to prepare one ledger account on the name of computer. Okay, so in the computer account there will be date column, particular column, JF journal folio number, amount column, date, particulars, journal folio number, and amount. So debit side and credit side. Okay, and another account, that is cash account. So here we prepare one more account, that is cash account. One more account, that is cash account. So in the cash account also we will have debit side as well as credit side. Debit side 4 columns and credit side 4 columns. Debit side 4 columns, date, particulars, JF number, amount, and credit side 4 columns, date, particulars, JF, amount. So this is the, in this way we can go to prepare first ledger accounts. After that, how we are going to post the journal information into the ledger account, you can go to observe. See here, in the journal entry, computer account is in the debit side. Computer account is in the debit and debit. Okay, computer account is a debit entry. Now, so when it is a debit entry, first we come to computer account. So in the computer account, first we come to the computer account. So in the entry, computer account is in the debit side or credit side? Yes, debit entry. So it is a debit entry. Is it a debit entry or credit entry? Debit entry. So come to debit side of the account. In the computer account, debit side we come. Next, after that, here you can go to write the date and a month and year. In the debit side, after coming the computer account debit side, first you write date and month and year, 2014 June 21st. After writing this date and month and year, next you can come to particulars column. In the particulars column, what we have to write? The debit entry opposite entry account name we can go to write. Here debit entry in the journal entry is computer account. Its opposite entry is cash account. So here in first what we have to do? First we have to come computer account. So from the computer account debit side, why we have to come debit side? Because the computer account is written as a debit entry. For that, in the computer we come to computer account. From there we come to debit side. In the debit side we can go to write date, month and year. After that, come to particulars column. In the particulars column we have to write the opposite entry. What is the opposite entry for the computer account? Opposite entry for the computer account is cash account. So here in the particulars column we can go to write to cash account. After writing the cash account to cash account, we can go to write in the amount column amount. So that is 50,000. So here debit entry posting we completed. In this way we can go to complete the debit entry posting. Okay, so what we did here, first we came computer account. From there we come debit side of that account. Why we here why do we come debit side of the account? Because computer account is written as a debit entry. For that we came debit side of the account. So then you have to write date, month and year. After that you can go to write the opposite entry in the particulars column. So what is the opposite entry for the computer account? Is to cash account. So that we can go to write here. After that you can go to write amount in the amount column. Like this we can go to complete the debit entry posting in the ledger and ledger account. Okay, next come to credit entry in the journal entry. So what is the credit entry in the journal entry? See, credit entry is to cash account. Cash to cash means nothing but credit entry. So cash account is in the credit side of the entry or credit side of the entry. Okay, now come to cash account. Here we come to cash account and next come to credit side. Why we have to come to credit side? Because the cash account is credit entry in the journal entry. So here credit side, first we come to cash account, then we come to credit side of that account, because the cash account is in the credit entry of a journal entry. So here next in the date column you can go to write date and month, that is 2014 January 21st. After that here in the particulars column the opposite entry, the cash account opposite entry is computer account. So here by computer account you can go to write, then in the amount column you can write 50,000. So here what we did, first we have to observe what is the credit entry account. So in the journal entry, credit entry account is entry account is cash account. For that we came cash account, and from there we came credit side of the cash account, and in the credit side date column we written date, then opposite entry to the cash account is computer account, so we've written as by computer account. Then in the amount column we've written rupees 50,000 as the amount in the journal. Okay, and here in this way we can go to complete the ledger posting for the given journal entry. So I hope children you understood the procedure, the way how we can go to post the journal information into the ledger account. Okay students, thank you for watching this video.